I'm Charlotte McLeod with investingnews.com, and here today with me is Gerardo Del Real, co-owner of Digest Publishing. Thank you so much for being here.
It's so good to be back. It's been a bit.
Yes, it's been a little while since we caught up, but so good to have you back. And here at the New Orleans Investment Conference, we've made it to the end of day two. So I think I can ask about sentiment on the show floor, any key takeaways among attendees that you've been taking in.
This is the best attended conference I've seen, and I've been coming every year since 2009, and is as upbeat as I've ever seen it. And so, look, I think with gold at 4,000, with silver at 48, with copper making new highs and seemingly having a lot of room to run, there's a lot of money to be made. And I think people have done well the last couple of years, but I think there's still a lot of money to be made, and people are excited. You can sense it.
Yeah, that's the vibe that I'm getting as well. So, since it has been a little while since we had a chance to talk, I wanted to start with a bit of a broad question and ask how your portfolio is looking right now. What is the breakdown, perhaps across commodity, size of company, that kind of thing?
Yeah, no, great question. So I'm still very bullish on copper. Copper and gold are probably, I would say, 45% of my portfolio right now. You could throw silver in there within that copper gold mix. Uranium is probably a 30% weighing in my portfolio. And, then the remaining 25 is like lottery picks, right? Because at the end of the day, I love exploration. I love discoveries. That's where traditionally, that's been my sandbox. That's where I've had the most success. And so, it's also where you have the most misses, but we mitigate the risk, and in a bull market, it becomes a little bit easier. So hopefully we don't mistake brains for a bull market and keep working hard, try to deliver.
Okay, so we'll try to get into each of those different commodities. Maybe we start with gold because that's so in focus at this show right now. And I think what's on people's minds is we're in this pullback. I've been saying all day, many people see this as a buying opportunity, but I'm wondering if you can help situate us in terms of where we are in the cycle. And when we look forward, what could be the trigger for the next move up?
I think there's two markets, right? I think there's one market that is the gold price, the spot price of gold, right? And then we're talking the gold juniors, which is where I play exclusively, right? That's what I do. Those are two very different markets. If we're talking about the gold spot price, I think we're probably like in the fourth inning if we're going to use baseball parlance. If we're talking about the equities, the junior companies, I think we're like in the bottom of the second inning. I think it's really, really early days. And so, look, a lot of companies have done well. We've done very well, but there's still a lot of value out there. And I think as valuations grow, because more capital comes into the sector, it's going to be critically important to find value and to not chase and to be disciplined. It's very simple to get overly enthusiastic about $4,000 gold, right? And just want to buy 30 things. Historically, for me, I try to keep, a personal portfolio of no more than 10 companies because I like to make big bets. And so when they work, it counts. And when they don't, hopefully the ones that do make up for the ones that don't, right? There's always going to be a miss here and there.
Right. And maybe a small follow-up question there. Is now the time to be buying gold juniors? If it sounds like you're set already, but if you're not, is now a good time to be looking at those types of companies and get in?
Absolutely. Absolutely. I mean, I've been doing it since gold was $700 or $600, right? And so in fairness, let me say that I'm biased because I love the sector, but there's a lot of value out there. There's a lot of juniors that are trading at valuations similar to when gold was $2,000. And here we are with $4,000 gold. Ditto for copper explorers and developers, right? Ditto for silver. And so I think if you're able to find value in this market and you're able to make, whatever substantial means to you, but a substantial bet on that value, you can do really, really well. And then there's a lot of game left, a lot of game left.
Yeah, and I know you made the distinction between the juniors and the metals prices themselves, but I'll ask you in terms of gold and silver prices. Do you have targets that you're looking for in this cycle, or how are you how are you looking at it?
That's what I think the last time we chatted was a few years ago, and I think I had mentioned $33,000 or $3,500 gold in a couple of years, and I think I said silver, would make new all-time highs. Well, we're there now, right? It happened really quick. It happened in the past 2 years. Look, I saw Rick Rule present about an hour and a half ago, and he talked about the 38 trillion in debt here in the US. The fact that we're adding 2-3 trillion to that number, to that deficit every year. Global debt isn't going in the right direction. And as long as we don't address that problem, there's going to be a lot of dollars chasing a finite supply of, you call it, copper, uranium, gold, silver, whatever they may be. So again, if I can find value and I can find it relatively early, I love pre-discovery stuff. You can do just spectacularly well in this market.
Do you have any examples of companies you would mention?
Absolutely. I'll give you an example of a company that we financed at 25 cents. I initially bought it at 11 cents, and then it went to 25 cents. And we took the bulk of the financing. We helped raise the capital for the company. And the company now trades at $1.60. The company's name is Kingsman Resources. It's my biggest silver gold position, right? Exploration company in northern Mexico. You can look at the 11-cent price and the 25-cent price and look at the fact that it's $1.60 now and think, oh, I missed it. But it's still only a $40 million market cap. And the analogs with similar companies are billion-dollar market caps, right? So again, that's a prime example of, yes, you can do very, very well, but you have to know what you own. Last year, I was doing some work for Perpetual Resources, and it hit like a low of $3. And recently, it hit a high of $40. And that's all within the last year and a half. The value was always there. I had visited that project twice in 2016 and 2019, if I'm not mistaken. And we knew that the value was there. We just didn't have the kind of market that was rewarding a deposit of that size. Now, it absolutely helped that, this administration has been really, really aggressive in fast tracking permitting. And it also helped that they have a big antimony kicker that really fast tracked, securing that permit and getting that done. So they did a phenomenal job. They deserve the valuation that they have now, some $3 billion market cap. But the value was easy to recognize 2 years ago, and it was trading at $3. You just had to be willing to be patient. And you had to know what you owned, right?
Yeah, and this brings up another question I've been thinking about recently, because there's been a lot of people mentioning to me today that when gold and silver went way up the last couple of weeks ago, they took profits from some of their stocks. And I've been wondering, you can do that, or when you have a company like you're mentioning with milestones, you know where it's going to get. Would you still do that if the price is running along with the metals prices, or would you just leave it and say, no, I know where this is going?
Yeah, that's a great question, by the way. It's tough because everybody's situation is different, right? And I have been notoriously guilty, and it's been great sometimes, and it's been not so great sometimes in holding too long, right? And so what I encourage everyone to do is know your risk timeline and your risk tolerance, and then trim as you go. If Kingsman Resources, right? I believe that company can be a $10 stock in the next year and a half. It's $1.50 stock right now. If I sell some at $1.50 or $2, am I gonna be sad or mad or upset that I sold some because it went to 10? No, that's a great problem to have, right? And look, my cost basis was 11 cents initially. So it gives me that leeway to hold a little longer than someone that maybe just got in at $1.50 and is hoping that it goes to $10. Still, great fourfold win. But you just kind of have to know what you own, why you own it, what those milestones are supposed to be. Make sure that the company's checking the boxes and doing the things that they say they're supposed to be doing. And enjoy the market. We're not going to get one of these, I don't think, in the next decade or two. And I think this one runs for another 3 or 4 years at least. And I think it's broad. I think it's gold, copper, silver, uranium, lithium. I know lithium's out of favor, right? Your audience is going to say, here goes Gerardo again with his lithium thing. I did phenomenally well during that last lithium upcycle, right? And sure, we've had a tough consolidation the last year and a half, but I think this time next year, lithium comes back in favor. And, you look at data centers, you look at, AI and the ambitions there, you look at the government support for mining, especially in North America. And I think this is the golden age of exploration and development in the critical metal space and the precious metal space. So take advantage of the market, folks.
Okay, well, we'll take a look at lithium, because I know you like that one, and I mentioned before we turned the camera on, you might be a little bit lonely there, but that is what you like. So, lithium, what is telling you that maybe we've got a turnaround coming, and maybe talk about how you are playing that?
In the lithium space specifically, I had the pleasure. So Patriot Battery Metals is a company that I helped finance at 16 cents, subsequently ran to $17. It trades just south of $4 today, right? And the CEO is a gentleman by the name of Ken Brinsden, who took Pilbara Minerals, a company, penny stock, to $10 billion market cap valuation, right? I had a great conversation with him a month ago, and he's adamant that we bottomed a couple of months back. And look, I try to make sure that when I'm vetting my ideas and my bias, that I'm asking people that are much smarter and much more tied in. So when he talks about the price of battery cells coming down and that increasing the demand, and how China can't continue to flood the market the way it has been because of its own environmental issues, and how there's now going to be a premium on North American critical metal supplies. And then I look at what Patriot's been able to do in terms of adding value. The shares aren't at all-time highs, but the value of the metals that they've discovered is truly world class. And so you can see where the upside is going to come from. And again, I mean, I had a blast from 16 cents to $17. I still own a bunch. And if it stays at these levels between now and year end, I'll likely add to that pretty substantial position.
All right, so that's the lithium angle right now, and maybe we talk a little bit more about critical minerals in general before we move over to uranium, copper. Are you looking anywhere else in terms of critical? Well, it seems like everything is a critical mineral now in some way, but are you looking anywhere else specifically there?
North America and Australia. You know, I happen to have some very good contacts in Australia, people that I've worked with, you know, in this business for over a decade, people that I trust, people that, you know, are very, very, very plugged into that region. And Australia does a great, great job of securing, discovering, and advancing critical metals projects. And look, the administration here in the US just announced, I believe, a week and a half ago, that is very interested in securing critical metals from Australia because we want to break away from that dependence on China, right? And that isn't a that's not an issue that's going to go away anytime soon. That issue will continue as it's trade wars now, but it really just is a cold war that's not so cold and it's not so silent anymore between the US and China, right? It's pretty much out in the open at this point. And so, no, it's going to be, pun intended, critical. It's going to be critical to keep securing those metals. So those two jurisdictions I really like because of the independence from China, Russia, and some of the other countries that, you know, may not be our best of friends.
So you would look for companies with critical minerals projects in those jurisdictions. Yeah.
America and Australia specifically, absolutely. I still love Peru. Peru's Peru. It always gets in its own way sometimes politically. But look, geologically, it's just endowed beautifully, right? They are still the #2 producer in the world of copper. And so Hannon Metals is a company that's one of, if not my largest holding, one of my largest holdings. And it will continue to be. It's pre-discovery. They have a copper gold belt, 18 different copper gold porphyry centers that they've discovered. And they've only explored like 10% of their land package. And so in an environment where copper's at an all-time high and gold is consolidating at 4,000 and silver's consolidating at 48, to have a company that's got a $120 million market cap and owns an entire belt potentially of these deposits is exactly my kind of play. It's got scale. It's got a management team that's technically competent, has capital markets experience. And then we just wait for a discovery, and you got to get ahead of it if you want to make the real money, right?
That's true. Okay, I have a question there though, because copper, we hear about these very long timelines. And if this is pre-discovery, how does that fit in with your narrative, I guess, on where the copper sector is going?
Yeah, look, I think, yeah, like for me, because exploration is where I like to see value added, I wouldn't hold a Hannon Metals until it turned into a mine, because that's going to take 15, 20 years, right? I'm not holding it that long. Frankly, they're not going to hold it that long. They are explorers, right? And so they do what they do best is they explore and they find economic deposits of copper and gold and other things, right? And they do a really, really good job of it. So for me, I like writing that exploration wave, right? A Patriot Battery Metals in the lithium space is different to me because I think that'll be permitted in the next couple of years. And so I'm happy to hold it for another couple of years, let lithium do what it's going to do, and then come back into favor and have the stock be in double digits again. But two very different approaches, right? One much more near term as far as permitting and production goes. And the other one, it's just an exploration play. It's a drill play. And I love those.
Yeah, yeah. So I guess that goes back to, you said you got to know what you have. All right. And let's make sure to touch on uranium as well. So that one is a favorite for our audience, definitely. And yeah, how are you approaching uranium right now? Because we're in this interesting time in the sector where it feels like maybe the prices are a little bit like this, but there's so many positive developments. So how are you approaching it?
Very aggressively. I mean, the past 2 years, Nick and I have financed several uranium companies of private deals that became public through management teams that we've made money with in the past, right? I'll give you one name, URZ3 Energy. We've done very well in bear markets. When uranium was $20 a pound with that team, it made, 1,200, 1,300% gains on what was formerly Azarga. They are back now, same management team. It's a similar group. They have the former CEO of Encore Energy, the former billion-dollar market valuation, is now on the board of directors, and yet the company has a market cap of like $15-20 million. It's early stage, it's structured well. We know where the shares are at, and I think uranium has some of the best supply-demand fundamentals I've ever seen for any commodity, and so I absolutely expect the utilities to get caught sleeping at the wheel the way they always do in every cycle, right? And they'll start contracting at $100 and $125 because it's a tiny input to them. Whether they pay $125 or $40 for them isn't consequential. It's consequential to me as a uranium speculator, and again, playing that very aggressively. We have been for the past couple of years with several positions, earlier stage positions, exploration and development in the United States primarily.
Looking earlier, yeah,
Absolutely.
okay, all right. Well, I think we've run through what you're doing right now, the main things you're covering. Any final points you would share with investors right now?
Find values. I'll give you an example. The rare earth boom of the past 6 months, right? It's been amazing. Yeah, companies like Energy Fuels go from $3-4 to $25-30, and that's fantastic. And now we're getting a consolidation in that space because it's very, very headline driven. And if you chase it at $25-30, you might not be the happiest right now, now that it's pulled back a bit. Do I think Energy Fuels continues higher? Absolutely. Do I think it's a great speculation because of the rare earth and the uranium combination? Absolutely. But again, the time to buy that was when it was $3, not when it was $30, right? And so find value. And if you can find pre-discovery or pre-development value by using, newsletter writers, whoever your favorite newsletter writer is, a group of them, that's where the real money is going to be made in this cycle. It's going to be real easy to chase. Gold will be higher here soon. Consolidation will be over. Everybody will forget, and everybody will pile in. Should be buying it when it's pulling back, right?
Well, great takeaways. And I almost forgot my fun question. So let me ask that one before I send you off onto the show floor. No, it's a fun one.
All right.
If we look forward to 2026, what would be your pick for best performing asset for the year?
Between now and then,
For 2026. And yeah, the whole year.
Hand in metals.
Oh, okay.
Hand in metals. And
You
again,
got a
I'm
company.
biased.
Okay, yes.
I'm biased. Yeah, I own a lot of it. We help finance it at 25 cents. We help finance it at 35 cents. I know the management team extremely well. I visited the site. And yeah, we're one drill hole away from that really, really, really taking off. If we're talking commodity, copper and uranium. I mean, I love them both. And, I had said uranium, I think, a couple of years ago, and that's worked out well. I had said copper a couple of years ago as well. That continues. I think this is one of those bull markets that the deficits are structural in nature. And so it's going to continue to run. This isn't a problem that we're going to solve with production and supply in the next 2 years or 3 years. So there's a lot of bull market left.
Okay. All right. Well, thank you so much for coming on. We'll have you back sooner again next time. This was great.
All right.
Amazing.
Cheers. Thank you.
Once again, I'm Charlotte McLeod with investingnews.com, and this is Gerardo Del Real.